Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is November 30th, 2011, and right now we are currently looking at price action on our 5-minute chart. And as you can see, we had a massive risk on rally for the pair for most of the day. And across multiple currency pairs, there was strong selling pressure for the dollar. The dollar weakened on a variety of different currency pairs. And there's actually two reasons for this that I'm about to explain to you right now. For one, around 5 a.m. my time, which is Central Standard Time, or 6 a.m. Eastern time, we heard news out of China that they were going to cut their reserve requirement for banks by 50 basis points. And the reason why they're doing this is to try to free up some funding for the financial system and ease some of the credit strain in the market. So then this news came out at 5 a.m. my time, and what it did, it boosted confidence, and we saw the pair shoot up about 60 pips. We saw this small rally in the pair all the way up to this resistance at this descending trend line. Now, if you were able to look at my last technical analysis video from a few days ago, you would have heard me talk about this descending trend line resistance. Let me go to our 3-hour chart right now. Now, as you can see, this is the descending trend line resistance right here. And for most of the month of November, it has served as good support historically and good places to go short. So on our 5-minute, you can see that price rallied up to this resistance, this trend line resistance, and actually this trend line resistance would have been a good place to actually go short and sell the pair for a quick scalp of about 40 pips. You could have entered in at about 33.32 or 33.30, and you could have sold the pair down and for a quick 40 pip scalp. So that was a good trade entry. But this news out of China was not the shocking news for the day. And about a few minutes later, we heard news that some of our G7 central banks like the Fed, the ECB, Bank of Japan, Bank of England, and the Central Bank of Canada, they had all agreed to intervene to provide liquidity to the financial system. And the way they're doing this is through using existing swap lines. And the reason why they're doing this is to protect some of the banks in Europe because they're already having major credit issues in Europe. So this effort by most of these central banks was done to make it cheaper for the European banks to fund US dollars, because it was already being done. The cost for doing it was already at a 3-year high. So really this rally or this intervention was done really out of desperation to prevent the financial system from collapsing in Europe. So we can see this 200 pip rally, and like under 10 minutes there was a strong 200 pip rally. And actually at the time of this intervention, I was actually going short in the pair. I had a trade on going short and I got stopped out. And that's one of the reasons why it's important to always have a stop loss line or a stop loss in place when you do trade the market. And this is done in cases where there is intervention, because those are things we can't predict. We don't know when it's going to happen, so it's always important to have your stop loss line in place. But of course we had this 200 pip move, and it rallied all the way up to the psychological resistance at 3,500, and then we began to see the pair slide back to this historic support at 34.16. Now, it was also at this support that we received news. Another report came out, and it was our ADP numbers. And our ADP numbers came in better than expected at 206,000. So we see this another risk on move in the market, past our psychological resistance up to this high at 35.30 level. So it was at this level that the market was really overbought. It was overbought actually on multiple time frames, on our 1 hour, on our 3 hour, and even here, even on our 5-minute, the stochastic shows that it was highly, overbought. So then this was a good area for sellers to come into the market at this level and bring the price of the pair lower, bring the price of the pair down. So you see this sliding in the pair. Now, if I was to draw a Fibonacci retracement from this high at 35.33, let me get it right, down to the low at 32.59. Let me do that right here. You can see that price retraced to the 38.2% Fibonacci level and found support there. But it was not just our 38.2% Fibonacci level. It was also where our 100 SMA line was. So then you can see that the 100 simple moving average line served as support. But also it was not too far from this historic support at 34.16. So we saw a slide in the pair from this resistance down to this support or this area of confluence at 34 20 level. So actually, if you would have got in at a right time, you could have entered a sell order somewhere around here or somewhere around your 3500 resistance, and you could have actually traded the pair down to the support for a 70 pip trade. So then, this was also another good entry, another good trade you could have got in on this slide down to this support. So then right now, as you look at price action, you can see that we're in this consolidation mode, that there's not too much volume in the market right now. And normally after strong movements like we've seen today, normally the market likes to remain calm. And this is especially the case before non-farms. And my personal opinion is I don't expect too much movement in the market ahead of non-farms report. I think the market's going to wait to see what's going to happen on Friday. But for most of Thursday, we may see this range-bound trading, this range-bound movement in the pair, maybe between a few, maybe 100 pips. We see this range-bound activity, but I don't expect much to happen for tomorrow leading up to or ahead of the non-farms payroll report on Friday. So that is it for my technical analysis review for today. I also want to make an announcement that we are meeting again and having a live webinar tomorrow for all of our VIP members. And that would be at 15:30 GMT time or 10:30 Eastern Standard Time. So if you're not a VIP member, then I encourage you to join us on tomorrow. You can sign up at one of the links below and become a VIP member and join us on this live webinar. We will be discussing what happened in greater detail, what happened today and what's going on in the market, but we will also place a few live trades in the market as well. So I hope you can join us on tomorrow. If not, then I hope you have a profitable trading day, and I will talk to you later. Okay, have a good day.